Hi, my name's Andrew Schmidt. I'm a principal at Dugan and Lepatka in our tax department, and I'm going to explain today the changes to bonus depreciation and Section 179 expensing under the OBBB, or the One Big Beautiful Bill, also known as H.R. 1, the bill that passed and became law in July of 2025. Bonus depreciation and Section 179 expensing are two major tax incentives that help businesses recover the cost of capital investments more quickly. Hopefully, by the end of this video, you'll have a better understanding of the rules, the timing, the limits, and the state differences so you can optimize your tax position. Enjoy!
We're going to talk about bonus depreciation and Section 179 expensing today under the tax law. Specifically, talk about some of the changes under the OBB, or One Big Beautiful Bill, also referred to as H.R. 1, the law that passed in July of 2025 and became law. So first, a little bit of background on what is bonus depreciation. We'll start there. Most tangible personal property, so things like equipment, office furniture, machinery, are all eligible for bonus depreciation. Additionally, qualified interior improvements to commercial real estate is an eligible asset class that you are able to claim bonus depreciation for, but other real property it generally is not. So things like acquisition of a building or any sort of structural improvement or change to a piece of real estate is not going to be eligible. So bonus depreciation in general is the ability to deduct in the first year that the asset is placed in service a percentage of the cost of that asset rather than having to depreciate it over 5, 7, sometimes 15 years, depending on the type of asset. So historically, the eligible percentage was up to 100% of the cost of the asset. However, the Tax Cuts and Jobs Act in 2017 that was passed initiated a phase out of bonus depreciation, where in 2023, the deduction was 80% of the cost of the asset, 2024 was 60%, 2025 was set to be 40%, and so on until it was phased out in full by 2027. So what did the OBB do? It reinstated that 100% deduction for all assets that are acquired and placed in service after January 19th of 2025. The provision is also made permanent, so there is no phase out in this iteration of the law. Absent a change from Congress, this provision will be a law of the land for an indefinite period of time. It's important to note that any assets that are acquired prior to January 19th of 2025, but placed in service after that date, are not eligible for the 100% deduction. Those would still fall under the old 40% eligibility rules that were in place prior to this law being passed. So what that means is effectively, if you had a binding contract to purchase a piece of machinery that you entered into prior to January 19th, but that machinery wasn't delivered and placed in service until after that January 19th date, that would only be eligible for the 40% deduction. So moving on to Section 179, very similar provision to bonus depreciation, but there are some key differences. General rules for this is that it is similar in the effect that you're able to deduct a certain amount of the cost of an asset, so machinery, equipment, office furniture. There's also certain real property that is eligible for Section 179 that isn't eligible for bonus. That includes the cost of a new roof or a significant upgrade to the roof on real estate, heating, ventilation, and air conditioning property, fire protection and alarm systems, and security systems are also eligible. So Section 179, where it differs from bonus depreciation, is that one, it's limited to taxable income in a given year, whereas bonus depreciation, you're able to use that to increase a tax loss or create a tax loss in the first place. Whereas Section 179, you're capped at your taxable income. And any excess that you claim towards Section 179 is carried forward to future years where you can potentially use it down the line if you have taxable income in the future. The other difference between Section 179 and bonus depreciation is Section 179 you can do on a asset by asset basis. So there's no all or nothing type provision, unlike bonus depreciation, where if you place 5 different assets into service during the year that are all 7-year assets, you either need to take bonus depreciation on all of them or you don't take them on any. Section 179, you're able to pick and choose which assets you accelerate a deduction for. And you're also within that asset itself. Let's say you have a $100,000 asset that's going into service. You can choose to expense $25,000 in the first year, $75,000. So there's a lot more flexibility in terms of how you utilize the deduction and how you spread out potentially your tax deductions over a number of years, which can smooth out income. It can take advantage of, if you're a pass-through company, it can take advantage of the graduated individual income tax rates to minimize your tax position over a number of years instead of just looking at it on a 1-year basis. Lastly, state provisions vary with Section 179 and bonus. The Illinois, as an example, bonus depreciation is not allowed. So if you have a bonus depreciation deduction in a given year, it gets added back to your income for Illinois purposes, and then you depreciate the asset over its 5, 7, 15-year life. Section 179, Illinois follows that and allows that as a deduction for state purposes. Most states vary, but the majority generally don't allow for bonus depreciation, but generally do for Section 179. Sometimes there's different limitations on that as well. So circling back a little bit to Section 179, this deduction is capped in a given year in addition to the taxable income limitation. So historically, or more recently, the maximum you could deduct was $1.25 million in a given year. With the OBB, that's been increased to 2.5 million. Additionally, there was a limitation where if you had a significant amount of capital assets in service in a given year, the deduction would begin to phase out and you could potentially lose the ability to take Section 179 in a year. Historically, or more recently, that threshold was 3.13 million. Once you got to that amount, then the deduction was phased out dollar for dollar as you exceeded that 3.13. Under OBB, the phase out threshold has been increased to $4 million. So very, very similar, or the overall 179 provision remains substantially the same. It just has increased limitations benefiting more taxpayers. So again, kind of comparing bonus depreciation in Section 179, what does that mean? Typically, it's faster deductions, stronger early cash flow for investment in capital equipment. It may impact your decision to buy a piece of equipment versus lease it. Leasing, you spread out the deduction as you make lease payments, and buying, you get that immediate tax deduction, which can be beneficial. Again, make sure you're paying attention to the state treatment. If you're a taxpayer that pays or files in multiple states, make sure you're looking at what do the states that you have an income tax obligation, what do they view Section 179 and bonus depreciation as? Is it deductible or do they not allow it? Well, again, that's kind of the big changes with respect to Section 179 and bonus depreciation. One of the biggest things that we see with our clients that this is going to be advantageous for is companies that are expanding or moving into a new facility and they're purchasing the building. They would be eligible potentially for a cost segregation study, which would allow them to carve out some of the cost of that asset away from 39-year depreciation, where they take 1/39th of the cost of the building and depreciate it every year, and move anywhere from 20 to 35% of the total cost into a bucket that allows them to take advantage of bonus depreciation in the first year. And that can provide significant cash flow savings from the purchase of the asset in the early years, which can be very beneficial for companies that are investing in real estate. So if you have any questions on this, feel free to reach out to us. We love talking to our clients about how to maximize their tax position, take advantage of what the law allows them to take advantage of, and look at it again, not only on a 1 year basis, but what does this look like for your company over a several year period. Thanks for listening.